So hi everybody. In this video, I'm just going to go through a quick, rather rough and ready um, review of what's happening in the property market at the moment. If you think that all of these pundits are right when they're talking about property crashes and all that sort of stuff, then fine, switch the video off. No need for you to uh, listen to me talk anymore. I'm not going to give you my opinion. Well, I am kind of going to give you my opinion, but I'm also going to share the information that I'm looking at so that you can reach your own decision or your own judgment on whether or not the property market is a good or a bad thing to invest in at the moment. This is not financial advice. You should always seek financial advice from someone who's qualified to give it. This is just my take of where the property market is going, and this is something that me and my business are quite heavily involved in at the moment. So we use most of our data from Ultimate Property Dashboard. If you're not seen Ultimate Property Dashboard, not used it yet, probably a good idea for you to set yourself up with a free trial. We will just come out of here for a moment. I want to actually just go really rough into the data and actually show you what it is that I'm looking at. So we're gonna go into Ultimate Dashboard to start with. This is a typical area that I'm looking at. This is SA6. You'll notice in particular on SA6 we've got high demand in some properties, but not all. High rental growth and quite a variety of change in asking prices. Sorry, I've actually picked the wrong one there. This is SA6. SA6 in the centre here, you can see we've got high demand, high rental growth, and quite a mixed bag in terms of performance of asking price growth. Now, if we go behind the scenes and we specifically look at that, and in this instance, I've got a three-bedroom property that I've looked at as a strategy in this area, you can see that all of the sliders are pretty positive. It's looking good in that area. But more importantly, if we look at the history, what's happened in this particular area, and this is common across the UK at the moment, we've got fluctuating demand. We've got demand going up and down in areas, and you'll notice as we arrive in September that demand is higher again. So we took a dip in August, and that's traditionally been the case. We've often seen dips in demand in August. We didn't last year in 2021, and we didn't in 2020 because we were heavily disrupted by the effect of COVID and the market returning back to normal during that time. So the traditional August drop off didn't happen in 21 and 20. It has this year. Now, a lot of people are jumping on it, saying, oh, the market's slowing down, the market's getting more difficult. Well, lo and behold, we get to September, we're back up to similar levels that we were seeing at the start of this year. So there's still high demand out there and a lack of supply. You'll also see that reflected in some of the values here. You can see the red line here. You can see rents zipping up, almost 10% growth on the rents. You can also see house prices, which tend to lag demand, still positive, and have been positive pretty much throughout the year. So I can see the underlying data, and I can see for specific areas that the demand is now returning. But that's not all, because there's far more for us to look at when it comes to the data and what's going on around us. So again, if we look specifically here, if we were to look, I've gone back into UPD. If we were to look at the ONS's latest data, latest statistics, and I'm scrolling through quite quickly here, this is a important measure for us all, and I use this often when it comes to forecasting what's happening next in the market. The producer price inflation, this is stuff that is going in to manufacturing to create the things that we buy, we consume in the UK. It's not perfect, it is a bit of a blunt instrument, but it's very accurate at forecasting where we're likely to be in the near future. Now, I'm taking this straight from the report. You can see that we've had significantly high levels of inflation. Annual growth rate in this is at mid 1970s levels. We've exceeded 2008. We've exceeded the early 2000s. We've exceeded the late 80s. We are at unprecedented levels of inflation, and you can see that not just in input but also in output. Now remember, stuff going in and then stuff going up, there's a gap. It takes a bit of time. You buy the raw materials, then you create something. The input is at 24% in June. The output is at 16. So that tells me, and I may be wrong, but that tells me, and historically it's told me, that's where the market's going. That's where inflation is going. Inflation is not going to slow in the near term, no matter what you often hear. Now, this is a probably more important measure. The next graph down, this is the latest input and output, and this takes basically a point in time as the 100%, the index. So you can see there that around about 2015 was 100%, and then you can see how much more expensive things are today than they were back in 2015. Now, up until around about COVID, we were tracking at about 10% more expensive. Then during COVID, we jumped up to sort of 20 to 30% on the input and around about 15% on the output. Now, lo and behold, the 15% is now actually what we're seeing in consumer inflation, the CPI. We're closing in on it, and we're probably going to get there. Look at where we're likely to be going forward. We have seen the output PPI at 135%. Okay, and the input today, the stuff that's going to be coming onto the market in future, is at over 150. So people saying that inflation is going to slow down and the property market's going to crash, they're wrong. I'm sorry to say it, but they're wrong. With this already built into the system, we are going to see further inflation. That's important. Why is that important? Why does it matter? Well, it matters quite a lot because we've also got some other factors that are at hand. We've got, at the moment, as I sit here today, OPEC are meeting to discuss reducing the amount of crude oil. Now, there has been a slowdown in inflation, underlying input inflation over the past couple of months. So the stuff going into the system, although it was growing and getting a lot more expensive, it's actually slowed down. Which means that's good. You know, that might mean we come to an end of this inflation bubble. But the only thing pegging that back is crude oil, petrol, oil, stuff we make, plastics, all that sort of stuff. Crude oil is an important thing within this. Now, that's over the past month been tracking negative. It's actually been falling. Oil prices have fallen from about $120 a barrel down to about 90. It's likely that that's going to be reversed, so that's going to actually go on the into inflation or up again. That's going to have further impact on inflation. Now, what the heck does all this matter to us? Well, the situation for all of us is that we are in inflation, and inflation will affect property values as well. Property values also are affected by this data. They increase in value because the rate of inflation out there in the wider market is high. In fact, I'm going to quickly just show you this. So if we go to the CPI from the ONS, let's perhaps if I can actually type the right detail, CPI. So if we look at inflation with the ONS today, if we look at this right now, so you'll see here we've got an important one. This is the important one. This is one that gets reported. CPIH 10.1%. Okay, that's what people are saying at the moment. Now, the critical thing here also, we've got RPI, which is at 12%. That's the retail price. So CPI is consumer, RPI is retail price. I'm not going to go into the details why they're different, but they just are. We used to use RPI, now we use CPI. If you look at where the CPI rate has been, you can see there that significant growth up towards around 13%. Now, remember I said that earlier, that we already saw that in the output, but we actually saw that output in September, October and November 2021. So it took about 6 months to then be shown in this data. That would lead me to believe that inflation is going to go even further. It's going to go up above 20%. It's going to be very difficult to bring it back under control. And trust me, interest rates are, whilst they are going to increase, are not going to necessarily slow that level down. Now, if you've got overall cost of living, wages, etc., all increasing at these rates of 10 or more percent, then the property market will follow that, because properties based upon their affordability and the affordability of what people can actually spend on them will, in real terms, fall. And I know that sounds odd, but imagine this, okay? We've got property values growing at 7%. Now, pre-COVID, that would have been absolutely amazing. 7% inflation on properties would have been great, and we'd all been jumping up and down, cheering from the rooftops. In today's market, the property market is actually behind inflation. So, with inflation at 10 and probably going up past 15 and on its way to 20, the property market's likely to grow slightly less than that. I'll be brutally honest with you, because difficulties and fear and stuff all gets thrown into the mix. But even if it grows at half the rate of inflation, you are going to be making 10% on the asset value of your property, and your rents are likely to increase by the rate of inflation. So comparatively your yields are likely to perform better as well. So when people are talking about the property market crash and the property market not performing well and the property values falling, they are wrong. Okay, the property market is not falling. The property market is growing. The property market, in terms of prices, is increasing. In real terms, it's falling because it's falling. It's not growing by the same rate as everything else. But for those of us that buy using mortgages, we leverage our money. So if you work out the amount of leveraged additional revenue you get from, or additional wealth you generate from, the total value of the property growing at 7, 8, 9, 10%, you'll note that there's a significant return on your investment, probably more than there's ever been before. So just because it's tough out there, just because we've got inflation, does not mean that property values are likely to fall. What it means is property values are likely to continue to increase, and increase by more, but they are not going to increase by the same rate that inflation overall, as CPI, is likely to increase by. And remember, that CPI is going to go off these charts. It's going to get much, much higher over the next few months. So property values are going to really increase. Now, I know a lot of people talk about the doubling of property values every 7, 8, 9 years and cycles and stuff. Well, I can tell you honestly from the data that this is an event where we were likely to see significant growth in the value of property, and this is one of those events that happens every maybe 9, 10, 11, 12 years. It hasn't happened for quite some time, but this is one of those events where it does happen, and it's driven not by the demand for property, although that's high. It's driven by external market forces, which you can see, and I've just taken you through on the screen here. Now, if you want to learn more about this, and you want to learn where the market is going and what is likely to happen next, and how you can maximize your performance from a business perspective as a property investor, I would strongly recommend that you join us on the Property Investment Forum. We run those once a month. There's a link attached to the video. You can check it out. You can come and join us, and I'll give you a much fuller update on what's likely to happen next. But just to remind you, the property market is not going to fall in value. It is just not going to grow or keep a pace with more general inflation. However, it is going to grow. The property market is going to grow at a faster rate than it has in the last 10 or 15 years over the coming 12 months. So if you're investing in property, this is probably the optimum opportunity for you to realize capital appreciation. And again, if you want to learn more about that, come along to the UK Property Investment Forum, where you'll learn a lot more about this, and I'll take you through a lot more data.